Forced insurance with the home loan? Now the bank's arbitrariness will not work. It is 5 o'clock in the evening when a family returns from the bank. There should have been joy on their faces because the home loan was almost approved. But there was a strange silence in the house. The father had the loan papers in his hand, the mother had the insurance brochure in her hand, and only one question was revolving in the son's mind. Are we buying a house or a financial trap? The bank officer had said with a smile, the loan will be done, just this insurance policy will also have to be taken along with it. The voice was soft, but the message was scary. The family could not understand whether this was advice, a condition, or pressure, because the person sitting in front was the very one in whose hands the hope of loan approval was visible. This is exactly where the common borrower becomes weak. He thinks that if he asks a question now, the bank will reject the loan, make the file slow, or raise some new objection. A home loan is not just money. Behind it are years of savings, the family's dream, the children's future, and the hope of moving out of a rented house. The benefit of this very fear has been taken in many places. Insurance with a loan, an investment plan with an account, a paid service with a credit card, and hidden consent in the app. Very often the customer feels that he has bought a product, but in reality the product was not sold to him, it was pushed upon him. This is the real story of mis-selling. Now the RBI has brought a big turn in this very story. The Reserve Bank of India has issued strict directions regarding the sales practices of banks. The objective of these directions is clear: to save the customer from confusing offers, forced products, misleading pitches, and digital tricks, so that banking stands on trust, not on pressure. The new arrangement is going to be implemented from the 1st of January 2027. This means banks have been given time to fix their systems, scripts, apps, agents, and sales incentives. Now no bank can say in exchange for giving a loan that insurance will have to be taken only from the company of our choice. Suppressing the customer's choice will now become a risk. The most important thing will have to be understood here. The bank can state the need for insurance for security, but it cannot forcibly sell its own or a partner company's product. If it is a property loan, the bank can talk about collateral protection or loan safety. But the customer can give proof by taking a suitable policy from a registered insurer. Meaning, the house is yours, the loan is your responsibility, and the insurance choice should also be yours. The bank cannot become just a gatekeeper that sets a condition to buy from its own shop. Mis-selling does not mean just selling a wrong product. It means pushing a product by ignoring the customer's need, income, age, risk, and understanding. If a complex market-linked product is sold to a senior citizen just because the commission is good, then this is not an ethical sale, it is a dangerous sale. If the borrower is told only the benefits and the exclusions, charges, surrender value, or lock-in period are hidden, then this too can come under the category of clean mis-selling. Many times the bank says, "Sir, this is free." Later, a fee, premium, or renewal charge is visible in the statement. The customer then understands that consent was actually not taken at all. The RBI has also made consent strong. Now consent must be clear, informed, and recorded. A pre-ticked box, silence, or a confusing screen cannot be considered consent. In digital banking, this rule becomes even more necessary. In a mobile app, small fonts, hidden buttons, misleading colors, or a design that makes the customer click wrongly is called a dark pattern. The RBI has put a stop to these dark patterns as well. Meaning, the design of the app cannot activate a product by confusing the customer. Today, many people upload documents while applying for a loan. In that very flow, insurance, cards, accounts, investments, or paid alert services are quietly added. The customer thinks the loan process is being completed, but from behind, an extra product gets activated. Now banks will have to audit such sales journeys. In the new directions, the accountability of agents is also important. The bank cannot say that the product was sold by our agent, therefore the responsibility is not ours. If a product is being sold in the name of the bank, from the bank channel, from the bank branch, or through a bank partner, then customer protection will also become the bank's responsibility. This change is big, because the power between the bank and the customer is not equal. The customer requests, the bank approves. The customer asks, the bank decides. When the loan is urgent, then the customer is not able to do negotiation. He just signs. This very thing makes pressure sales dangerous. A home loan protection plan in itself is not a wrong product. For many families this can be useful, because if something happens to the borrower, the loan burden can reduce. But there is a world of difference between a useful product and a forced product. A right product is when the customer buys after understanding. A wrong sale is when the customer buys out of fear. The real purpose of insurance is protection. If that very protection becomes fear selling, then the customer comes into a double risk. On one side the loan, on the other side an unwanted premium. Many borrowers are not even told that a single premium has been added to the loan. They feel the EMI is only for the house, but inside the insurance premium is also financed. Its impact is not small. The premium adds to the principal, interest is charged on it, and the borrower keeps giving interest even on such an amount for many years, the need for which was perhaps not there at all. Sometimes the customer does not even get to know in whose name the policy is, how much the cover is, how the claim will happen, and whether money will be returned upon cancellation or not. This is the very reason that the RBI is talking about a refund. If mis-selling is proven, the bank will have to refund the amount, and information about the sale cancellation will have to be given to the customer. This is not just a rule to return money. This is a message to banks that aggressive selling can now become a compliance risk, not a profit center. For banks, insurance and third-party products have been a big income source. Commission is received, targets are completed, and branch performance looks good. But when the target becomes bigger than the customer's need, then banking does not remain advice, it becomes sales pressure. The RBI wants to put a brake on this very pressure culture. If employees or agents are given such targets that push them to sell an unsuitable product, then questions will be raised on the bank. This means the branch officer too will not remain just a person who makes a sale. He will have to take care of customer suitability, disclosure, and consent. How will this change come of practical use for the customer? Suppose you went to take a home loan, and the officer says that the policy will have to be taken only from our partner company. Now you can politely ask, is this compulsory, or can I give an equivalent cover from any registered insurance company? This question can change your position. You can ask for the requirement in writing from the bank. If insurance is truly necessary for loan security, then the bank should clearly state the type of cover, amount, and reason. If someone says, "Sir, understand it verbally," then become cautious. In finance, verbal talk flies away in the air at the time of a dispute. The borrower should ask for a copy of every document. The loan agreement, sanction letter, insurance proposal, premium breakup, and consent record, everything should be saved. If the premium is added to the loan amount, then this too should be clearly visible. It is necessary for the borrower to understand on what principle the EMI is being made. Many people sign blank forms in the greed of getting the loan quickly. This mistake can prove very costly in the future. In the insurance proposal, things like nominee, cover term, exclusions, and medical declaration should be filled carefully. Wrong information can become a reason for claim rejection. The customer should also understand that loan insurance and property insurance can be different. One covers the borrower's life risk, the other can cover the property damage risk. If the bank asks for property insurance, then that can be a matter of collateral protection. But forcing life insurance can be a different issue. It will have to be understood by looking at the context. The RBI's rules give power to the customer, but they also give responsibility. If the customer himself chooses a combo offer, gives clear consent, and understands the product, then that can be a valid sale. Therefore, every bundled offer is not wrong. It is wrong when choice is ended, information is hidden, or the product is sold by showing the fear of approval. Now the question is how the complaint will become strong. A complaint becomes strong with proof, not with emotion. WhatsApp messages, emails, call recordings were legally allowed, premium receipts, bank statements, and loan papers, all these can become the customer's voice. If a solution is not found at the branch level, then the matter can go to the bank grievance system, nodal officer, and further up to the ombudsman route. But every step should be with a written trail. The borrower should clearly write in the complaint which product was sold when, who said it, what condition was kept, and what loss happened to the customer. Just writing "the bank cheated" can make the case weak. But writing "loan approval was stated to be conditional upon insurance purchase" makes the matter specific. The impact of this change will fall on banks too. Now they will have to make branch training, digital interfaces, agent control, and sales scripts more responsible. It is possible that in the beginning paperwork increases. Perhaps bank officers make you read more disclosures. But in the long term, this can increase trust. For an honest bank, this rule is not a threat, it is an opportunity. The bank that gives choice to the customer, the same will earn loyalty in the future. Financial products should not be sold out of fear. If insurance is taken after understanding, it is protection, but if taken under pressure, it can become a burden. This story is not just about a home loan. This is the story of every such customer who sits at the bank counter and thinks whether asking a question might turn out to be costly. Now, asking a question is not a weakness, it is a right. Why do I need this product? Is this compulsory? Can I buy from outside? These questions are very necessary. In the excitement of loan approval, the biggest trap is exactly this, that the customer stops reading documents. In the joy of getting a house, he ignores financial terms. But before taking the key to the house, it is necessary to understand the key to the loan. EMI, insurance, charges, foreclosure, the reset clause and hidden add-ons, all are linked to your future income. The RBI's new step is a signal that the banking relationship will run on the customer's trust, not on hidden pressure. Now the bank will have to understand the customer's need, explain the product, record consent and bear the risk of a refund on a wrong sale. The borrower too will now have to sign after understanding instead of signing out of fear. Because the law can give protection, but the proof has to be made by the customer himself. Next time, when any bank officer says, the loan will be received only when you take this insurance, stop at that moment. Smile and ask for the written rule. Because now the story is changing. The person buying a house will have to understand not just the registry of the house but the registry of his financial rights too. The day the customer asks without fear and the bank answers without pressure, on that very day the loan market will truly become fair. And this is the real message of this new RBI step. The loan dream needs protection, but not a forced sale in the name of protection.
This video has taught you something new. Or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.